Here we have the hourly price chart, the 1 hour price chart for GameStop Corporation, stock ticker GME. Here we can see that the stock is managing to post a continued recovery and continued move to the top side. And there are some very important reasons why this is occurring. And there are some important implications for what this actually means for the stock going forward. So, as we can see here, currently we are coming into a few red candles here. This is the hourly chart. So we have to remember that each candle here represents a 1 hour trading period. And we are starting to see some red candles here develop, but this is following a strong period of price movement where the stock is posting a continued series of higher highs. If we were to go back to the last video, we would see that the prior resistance zone came in at roughly just above 2860. And we can now see that prices have continued to break above this level, and we can continue to, outline resistance areas at higher and higher levels. So this is important for a few different reasons. I mean, one, it suggests that a true turnaround is developing here. In prior trading sessions, the stock was being characterized by massive movements to the downside. There really wasn't much question about this. This is kind of the post Roaring Kitty price movement, which was obviously not a favorable price movement. And so the stock really was encountering a large amount of negative momentum that really had to stabilize itself. So, if we just kind of quickly look here, I mean, I understand this is kind of a flattened out chart here, but the price movements themselves are not flattened out. So, what we can see here is that after this period of decline, we're sort of getting a flattening period here where share prices are stabilizing and trying to kind of base themselves for an ultimate run higher. And this is really what we're starting to see at this point. The price movement to the top side here, if we kind of drill in here and kind of zoom in here a bit, this period here would have been this period of sideways trading movement. This would have come in at roughly, mostly below the $25 mark is really where this was occurring. But now we're already seeing prices, well above these levels. And we're already seeing highs that are approaching the $30 mark. The most recent high is coming in at 29.79. So, this is a very important price level because we are expecting to see some short seller defense of this stock, from their side of it, just ahead of the $30 mark. We're already seeing a bit of this. I mean, if we kind of drill into this most recent candle here, where the price rallies or the upward price movements were occurring, we can see that there's a long line on the top of this candle, or a long wick. It would be referred to as a long wick to the top side. And what this does mean is that, prices were kind of rejected a bit from this 29.79 area, but the overall price movements lower were not substantial. The closing period for this candle comes in at 28.95. So, we're not even talking about a full dollar in downside price movement here. There was some rejection here. Let's not try to sugarcoat things or ignore the negative points here. There was some selling pressure here. But overall, the candle still remains green, which means that we closed this hourly period higher than we opened. In addition to that, you can also see that there is, trading volume activity here that is much more positive than negative. So, overall, even though we're starting to see some rejection at this $30 level, the majority of the evidence still supports the bearish outlook here in this case because um, the upward momentum continues, and we're continuing to see a series of higher highs without any major support zones being broken to the downside. As long as these trading volumes remain favorable, and we're not seeing any outsized, short selling price movements, order flow, things like that, we can continue these price trends to continue. If we're looking at the indicator reading, we do have to note here that we are trading very close to overbought territory. We're not quite there currently. We recently rolled out of overbought territory. This price spike here did actually accompany a period of overbought trading conditions here. As we can see, this price spike high was accompanied by a reading in the relative strength index that came in above 78. And we can remember here that readings in the relative strength index, that's this purple line down here, Readings in the relative strength index above 70 suggests that the asset is overbought and probably needs to either show a corrective pullback lower or at least show a period of sideways trading activity. Sort of a consolidation, sideways consolidation, can also get you out of this overbought trading condition. So overall, here these are encouraging developments because the vast majority of the technical indicators at this point are supporting the positive outlook. So what does this really mean as far as short selling pressure going forward? What are we likely to encounter here? If we go back to the share price highs that were posted in the middle of June, we can see that the price highs during this period came in at 29.93. More recently, today's price movements did not quite reach that level. We failed a bit at 29.79. So it does suggest that there are people that are defending this prior historical resistance zone. And as we can see here, these movements were successful. These short selling movements here were successful to the downside. And they were ultimately able to force prices all the way into the lower 20s. I mean, this negative price movement really extended into all the way into the beginning of July. July 1st, we were seeing prices trade as low as 22.32. So this is what occurred the last time we were kind of approaching this $30 level. So these are points that need to be considered here. I'm not saying that we will not break above the $30 level. I'm just saying that the last time we were here, there was a significant amount of selling pressure that was able to force prices back into the lower 20s. So what do we think about the current condition? Will this continue? Will this type of thing happen again? One thing that can be said here is the fact that the more you test a certain level, the more likely that level is going to be to break. Certain price zones can only withstand selling pressure so many times. If you start to see a triple top or a quadruple top or something like that, it starts to become much more difficult to defend that level. And this is probably the outlook that's being experienced by those in the short selling side of the market. In addition to that, we do have this rising momentum rating in the relative strength index, and we're seeing share prices move higher, even though the rest of the market is having a large amount of selling pressure during today's trading. If you look at an NVIDIA chart, I just posted a video on NVIDIA and another one on Meta Platforms. I do recommend that people take a look at those because those price charts are a complete mess. They're falling through the floor. They're breaking through significant support zones as GameStop and AMC continue to push higher. These are significant developments here because if the broader market is selling off, why wouldn't a meme stock be selling off? I mean, these Mag 7 stocks are supposed to be the more stable company, the safer investment, so to speak. So why would this be occurring here? Why would we see this kind of slow and steady and stable upward price trend in what is supposed to be just a meme stock? So these are important questions that really need to be answered here, and it really does show that the underlying momentum that is being seen in GameStop and AMC is the real thing, and it continues to move forward. So these are the price activity pieces of evidence that need to be seen in order to actually generate a short squeeze here going forward. It's not going to be some random piece of information that somebody tweets about or something like that. It's going to be shown in the price action itself. And we do need to start seeing short sellers kind of move back and retreat to higher and higher levels. The current level here to watch is clearly the $30 mark. The last time we were at this level, we saw a forceful rejection to the top side, or to the downside. So if this does not occur this time, and if we do see a move to the top side, it would be a suggestion that the paradigm has shifted and that the stock is ready to start moving much higher. So here's the current market outlook for GameStop Corporation, stock ticker GME.